Hello, welcome to the second session of the chapter Index Numbers. This is Shubhada. At the end of first session, we learned different relative measures. They are price relative, quantity relative, and value relative. These are all simple index numbers, mean only one item is considered at a time in the construction of an index number. If we want to know the relative change in the level of price of a single item, then it is called price relative. Similarly, if we want to study the relative change in the level of quantity of a single item, then it is quantity relative. The last one, the study of relative change in the level of value of a single item is called value relative. Now, let us consider a problem under price relative. Here is the problem. If current year price of a commodity is 250 and base year price is 200, find the price relative. While solving, first recognize the given data with notations. Given current year price P1 is equal to 250. Base year price P0 is equal to 200. Here both P1 and P0 are small letters. Substitute these values in the formula of price relative, solve, and we end up with the answer being price relative presented by the letter capital P is equal to 125. Now we have to give conclusion regarding this result. Before that, we should know that theoretically base year index number is always 100. Means we assume that for base year index number is 100. And in this problem, answer calculated, that is 125, is the index number of the current year. If we compare the current year index number 125 with base year index 100, the difference is 25. That means price increased by 25%. That is, though actual price increased from 200 to 250, in percentage form, price increased by 25%. Therefore, we write the conclusion saying the price in the current year is increased by 25% as compared to the base year. So, we had to remember while writing the conclusion, comparison should be expressed in percentage. Similarly, we can solve problems under quantity and value relative technique. Now, we are starting with characteristics of index numbers. Here they are. The first one, index numbers are specialized type of averages. Second, index numbers are expressed in ratios, but while comparing they are expressed in percentage. The third one, they facilitate comparison. The fourth, index number study the effect of factors that cannot be measured directly. These are four characteristics of index numbers. Let us understand them in detail. The first characteristic is index numbers are specialized type of averages. We know that index numbers are averages and they tell us the average change in the level of a phenomenon. Now, the question is why they are called specialized averages. For further discussion, let us consider the data given here. It contains different items with their prices. But if you observe, the unit of measurement differs from one item to the other. Here, rice, pulses and vegetables are expressed in kgs, milk and oil are expressed in liter, and clothing is given in meters. Usually, an average is found for a series expressed in common units. But in case of index numbers, average is found for a series expressed in different units of measurement. Like in this case, items are expressed in different units like kg, liter and meter. Hence, index numbers are called specialized averages. Now, let us move to the second and the third characteristics together. For the same, let us consider this example once again, which was discussed earlier under price relative problem in the beginning of this session. Here it is given that current year price P1 is 250 and base year price P0 is 200 and price relative capital P is 125. In the formula, if that 100, which is a constant, is neglected, we are left with only the ratio 250 by 200 indicated by the blue circle. That shows index numbers are expressed as ratios. But for the purpose of comparison of current year with base year, index numbers are expressed as percentages. In this example, 25% is the comparison indicator in percentage. That completes the explanation for the second characteristic. This second characteristic itself implies the third. It means index numbers are expressed in percentages for comparison implies that index numbers facilitate comparison, means they help in comparison. Here is the next characteristic and the last one. Index numbers study the effect of factors that cannot be measured directly. For example, cost of living can't be studied directly. Instead, we study the changes in the factors which affect the cost of living like food, rent, clothing, fuel, etc. to find the cost of living index. In this way, general price level, changes in business activity in a country cannot be studied directly. Instead, their influencing factors are studied and expressed as index numbers. Thus, index numbers study the effect of factors that cannot be measured directly. That completes the explanation of all four characteristics of index numbers. Now, the next stage, it's about uses of index numbers. They are here. The first one, index numbers simplify the data and thus facilitate the comparative study. Second, they study trends and tendencies. Third, they measure purchasing power of money and used for deflation. Fourth, they measure the change in cost of living of different groups of people. Fifth and the last use is index numbers help governments to frame policies regarding fixation of bank interest rates, allowances to government employees, licenses to new firms, imports and exports, and taxation. Here is the first use of index number. It indicates index numbers simplifies the data and thus facilitate comparative study. For this, we consider a data given here having different items A, B, C, D and E with their prices in base year and current year. If an index number is calculated for this data, we obtain a single value 125.61 to represent the entire data. Thus, Index number simplifies an entire data into a single value, means it simplifies the data, and hence later comparison can be done. As we discussed earlier under one of the characteristic of index numbers, that index numbers facilitate comparison, which is the second part of this statement. Now, let us consider the second use. Index numbers study trends and tendencies. Means an index number indicate whether the prices of commodities are going up or down. That is, whether prices of commodities show upward or downward trend. The third use, index numbers measure the purchasing power of money and used to study deflation. Here, purchasing power is the amount of goods and services that can be purchased with a unit of currency. If you take one unit of currency, for example, if you take 100 rupees to a store in 1990s, it would have been possible to buy a greater number of items than you could buy today, indicating that the currency had a greater purchasing power in 1990s than today. This purchasing power of money can be measured using index numbers. The second part say index numbers are used to study deflation. Here, deflation means, in simple, the reduction of the general level of prices of commodities in an economy. Now I conclude, index numbers are used to reduce the general level of prices of different items in the economy of a country. Reduction in the price level of items make general public to lead life comfortably without much burden. By knowing purchasing power of money and deflation, a government can have a better approach in providing a better living condition for its citizens. The fourth use, index numbers measure change in the cost of living of different groups of people. Here, cost of living is the amount of money needed to sustain a certain standard of living by affording basic expenses such as housing, food, healthcare, taxes, etc. Index numbers help in measuring changes in such cost of living of a group of people or different groups of people and compare their standard of living. Thus, index numbers help to measure the change in cost of living of a group of people or of different groups of people. The next use, according to that, index number help government, either central or state governments, to frame different policies, such as the first one, in fixing the bank interest rate depending on the economic condition of the country now and then. Second one, in deciding allowances like dearness allowance amount to be given for government employees. The third one, index numbers help government to decide how many new licenses to be issued to firms in different sectors in accordance with the balance of prices of commodities in the economy. Otherwise, more licenses to produce same commodity results in drastic drop in the price of that commodity in the market, which will be having adverse effect on the manufacturers, in turn on the economy itself. The next point, index numbers are used to decide the volume of imports and exports of goods to maintain the balance in their prices. The last point, index numbers help to decide tax slabs for different categories and different income groups. That complete all the uses of index numbers. Next stage, limitations of index numbers. The first one, index numbers are approximate indicators as they are based on sample data. Means, in the construction of an index number, usually sample data is taken instead of entire population data because of constraints of resources. Hence, index numbers are just approximate indicators, not the actual indicators as they are based on sample data. Second limitation. As there are many formulae for index numbers, we get different answers for the same data. Hence, it is a challenge to select a proper index number formula for a data. Therefore, it is one of the limitation. Third, while constructing index numbers, the quality of the items is not taken into consideration. Therefore, it is a drawback and considered under limitation. Fourth, index numbers can be misused to get desired conclusions as any other statistical technique. Fifth limitation is as customs, traditions, and habits of people vary from time to time, it is difficult to assign proper weights to various items. To know this point, I have this explanation saying, in first PU, we learned a statistical measure called weighted arithmetic mean. Based on the same concept, in the construction of some of the index numbers, weights should be attached to different items according to their importance. But as customs, traditions, and habits of people change over the time, it is difficult to decide the importance of items, and hence assigning proper weights to various items will become a challenge. For the same reason, assigning proper weights is one of the limitations of index numbers. The sixth and the last limitation. In the construction of index number, there is a chance of an error or mistake at each and every stage, resulting in a wrong index number value. Because of this, it is considered as a limitation. Now, the next concept, types of index numbers. Here, classification is done on the basis of different factors or variables. Here, different factors or variables are price, quantity, and value. Now, first let us look at the difference between them. If the change in the prices of different items had to be studied collectively, the index number is called price index number. If the change in quantities of items have to be studied collectively, the index number is called quantity index number. Similarly, if the change in the value of items had to be studied collectively, the index number is called value index number. Then, among price index numbers, there are two types. The first one, wholesale price index numbers, and the second type, retail price index numbers. Now let us learn their definitions. To start with, price index number. Price index number measures the general change in the prices of items in the current period compared to that of the base period. This definition is very similar to the definition of price relative. If we compare both of them, learning this definition becomes very easy. Price index number is denoted by capital P with 0 and 1 written at the base. Types of price index numbers. Among them, the first one, wholesale price index numbers. Wholesale price index numbers measure the relative change in the wholesale price level of various items, whereas retail price index numbers measure the relative change in the retail prices of various items. Cost of living index, or the other name for it, consumer price index, is the best example of retail price index number. It is a specialized kind of retail price index number. Here is the definition of quantity index number. Quantity index number study the relative change in the volume of goods produced or manufactured or consumed or distributed in the current period compared to that of the base period. It is denoted by Q01, a capital Q with 0 and 1 written at the base. Now, the last concept of this session, value index number. The definition: value index number study the relative change in the total money value of production in the current period compared to the base period. It is denoted by V01, capital V with 0 and 1 written at the base. That completes session 2, and here is the assignment 2. Here we got some 4 questions. The first one, define index number and mention the characteristics of index numbers. Mention the uses of index numbers. Mention the limitations of index numbers. And the last question, define price index number, quantity index number, and value index number. You can find answer for all these questions. If there is any doubt, listen the lecture again carefully with concentration. If the doubt still persists, list the question and it will be answered when we meet in the college. Do the same for the next sessions as well. Thank you.